We've been asking this question for a long time, and it has been a steady and painful decline. What's next? How much longer can it go on like this?
Oh, it has been painful to watch. Honestly, it's a great American brand and an American icon, and it's like watching a train wreck in slow motion. It can go on for as long as their CEO wants to continue to loan them money until he runs out of money or comes to his senses. The fundamentals, though, are that there really is nothing special anymore. And in order to be successful in a very, very difficult retail environment, you have to be special. You have to be famous for something. And Sears isn't the cheapest. It isn't the most luxurious. It doesn't have the best locations. And now it doesn't even have exclusively Craftsman and Kenmore. Kenmore's available online, and you just reported Craftsman's available at Lowe's. So there's really no reason to go there. And until they can figure that out, it's going to be a very, very tough road.
What about Whirlpool? I mean, this has been no great shakes for them either. That stock was down more than 10% today, and they reported last night on their earnings that their costs of materials have been going up. That's probably where the price dispute came from for Sears.
Yeah, you're right. I mean, Whirlpool's not been lighting the world on fire, and the loss of the brand won't hurt Whirlpool or Sears. But it's really, for Sears, it's more indicative of the fact that if they're losing long-term partnerships from their suppliers, that goes with investors that bailed on them last week. They're just not good signs.
It's interesting to me. I mean, as Bill says, in terms of the CEO, Eddie Lampert's, it's basically in his hands as to whether he really controls the company. And it's been a managed retreat for so many years. I mean, every single time they report results, they talk about their liquidity, their access to continued revolving credit lines and things like that. So it basically has been this decline. I think, though, Bill, one thing people maybe overlook a little bit, that half the stores and a third of the revenue is Kmart. It's not necessarily Sears proper. Do you think that Kmart has more or perhaps less of an ongoing place in the retail world as it stands right now?
I mean, Kmart still has a few really good locations that's keeping them afloat. But you take two businesses that have been struggling and you put them together, and then somehow you think that together they'll be better than they were separately. And it's just not the case. I think Kmart's struggling too, and maybe separately one of the two of them might have been able to make it, but put them together, and I just don't know that there's enough capital, intellectual resources, or market dynamic available to save the both of them.
So what do you do if you're a shareholder, Bill, of Sears?
I'd been running a long time ago, to be quite honest with you, as what we saw last week from some of their biggest investors.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.